we can see we have more 9 minutes, so let's see. I want to see the market will trade this 50% of this inversion fair value gap, then the body will be close above the 50% of this, then I look for buy entry until this buy set liquidity. So as we can see, the market has traded the 50% of this inversion fair value gap. Now it's done. Now let's see what this market is trying to do. Now I have to look for the 15 minutes chart. It can go until this gap, okay, no problem. Oh, sorry. As you can see, this is the last fair value gap. Market traded the last fair value gap, then it went higher. So this is the entry fair value gap. The market can reach here also, okay, but whatever it wants to do, I want to see the 15 minutes candle body will be close above the 50% of this or above the 50% of this, but not below the 50% of this, okay. That's the minimum. Let's see, 7 minutes to go, but by 3:30 I think I will be getting a entry opportunity. By 3:30 to 3:45, okay. Let's see what can be done. So our first confirmation is done. As we can see, the market is above the 50% of this inversion fair value gap, and I would like to see the market should close the body above the 50% of this new week opening gap, above this black line, okay. This will be giving much more confidence to me that the market is fully bullish now. Then I would like to see for entry. Yeah, now I would like to go to 1 minute chart and look for entry. See, I said the market will maximum reach until this, okay, or take this. I will take one entry from here. Let's see. Let's wait for the market structure shift. There the buy side liquidities were over here. The buy side liquidities has been taken over here. So let's see. Soon I will get the expansion on the market. So many manipulation has been done over here. Sell side liquidities taken over here. So the only thing is left for the market. The only jobs are the buy side liquidities. Okay. So let's see. There is no valid market structure shift over here. Okay, and let's look at the 15 minutes chart. More 2 minutes to left. Let's see. This would be my first partial. No, I would like to keep my first partial to the last fair value above this. I didn't get any sort of valid market structure shift. So let's see. We can see the 15 minutes candle body has been closed above the new week opening gap. So that's what I want to see. Now I would like to see a 1 minute market structure shift, or it can do one thing also. Wait, let me take the entry from here. My limit entry over here. Okay, buy, and my TP is over here, and the stop loss is will be covering this. Stop loss will be covering this. that's my entry. Now let's see what happens. I'd like to take the entry from here. My first partial, and that's my stop loss, nearly about 13 handle. This is my last entry for today. This is my first partial, and this is my whole, sorry, this will be my target profit. Wait, let me show why I took this entry. This is the, sorry, this is my last fair value gap, and this is my entry fair value gap. What I did, I simply take the entry from the new week opening gap. Okay, I simply take the entry from the new week opening gap. When the market came here, I took the entry. That's my first partial, sorry, this is my target profit over here, and I would like to that my sell limit. Okay, that's my first partial. Let's see what's gonna happen. When the first partial will be heated, I would like to trail my stop loss to the break even. Okay, that's my entry. This is the last entry. If I get stopped out, I want to go for any sort of entries today. This is the last entry for me today, as I have two losses of 20 handles. Let's see, this is nearly about 42 handle, and my first partial is let's see, my first partial is on 31 handle. So if my first partial is hit, I'll trail my stop loss to the break even, and at the end of the day I will be going with 12 handle profit. Okay, so now I would like to see the market will be going for the buy side liquidity. Let's see what this market is trying to do. The market can wait, I put my stop loss on the, my stop loss is way correct, but this, okay, yeah, now it's perfect. the market can again come to this entry fair value gap. Okay, as here we can see there is a volume imbalance. Wait, I have to put my stop loss below the volume imbalance. Okay, this is the volume imbalance, a little bit lower of this volume imbalance. Yeah, now it's okay. The market can again come and simply trade the last fair value gap, but I would like to see the last fair value gap will be unfilled. Okay, wait, let me mark this as a want to see unfilled. Wanna see unfilled. This is where a order block. Okay, this candle which has traded the fair value gap, the entry fair value gap. So in my opinion this is a order block. I don't want to see the wait, let me mark the 50% of this order block. This is the order block. Okay, this is the order block, and wait, let me mark the 50% of the order block. That's the mean threshold. Okay, that's the mean threshold level of this order block. I would like to see the market will trade the order mean threshold of this order block, but nobody will be close below the mean threshold. Okay, nobody should close below the mean threshold of this order block. That's what I want to say. Now that's the different topic. the entry fair value gap isn't traded yet. Okay, so I would like to see the market will trade the entry fair value gap. Also this can remain unfilled, no problem with that. Let's see, we are on the market now. It's disgusting. Why the price is this much range bound over here? Bullshit price action. Let's see what this can do. By the way guys, please subscribe and like this video, and subscribe to the channel for more insightful videos and educational videos. Here as we can see, the price created some buy side liquidity, taking the buy side liquidity and making the sell side liquidities also. Okay, so I would like to see the market will take this sell side liquidity, trade this last fair value gap one more time, or trade this 50% of this order block, the minstrel, then the market will be giving a big run. Okay, so let's see what can be done, but that's what I want to see the market will do. So let's see, but in between 20 minutes, 15, 20 or 30 minutes, not 30, between 20 minutes we will be getting a run. Okay, so some sell side liquidity has been taken over here as we can see. So let's see what the market can do further. I just want to see there will be a fair value gap. Okay, 1 means fair value gap, then the market will trade that fair value gap and I would like to trail my stop loss. That's what, see the run. Okay, that's what I want to see, guys. That's what I want to see. Now let's see. Market has taken the buy side liquidity. Now it can also take the sell side liquidity. Okay, here I can see more sell side liquidities left. Market will take the sell side liquidity, then it will provide us another big run. Okay, but within 20 minutes I will see a big run. Before, I would like to see the run before 345. Now it's 1527, I mean 327, so I would like to see the run before 345. This has taken the buy side liquidity, like this short buy side liquidities. Now it will be taking the sell side liquidity, tap to this mean threshold, and another time the market can tap to this. Okay, then the market, I don't want to see the last fair value gap. If the last fair value gap is traded, that's good, no problem, but if it's not traded, this is much more better. Okay, this is nearly about 16 handle, no problem. Oh my god, this is the order block. Okay guys, this is the order block. This specific candle is the order block which is holding this price. Okay, you can't see any sort of fair value gaps over here. Okay, the only thing is this order block which has blocked this price. Okay, so that's why I have marked the 50% of this order block. That's the mean threshold. No body, okay, no body should be closed below the 50% of this mean threshold. It can be traded, no problem with that. I want to see the market will trade that. That's much more well better for the what sort of price action is this, by the way? This is dangerous price action. Lol. But this sell side liquidity will be taken. Okay, market will be coming for that sell side liquidity. Market is simply inviting the buyers over here. Market is inviting the buyers over here. Okay, see, market created a support over here. Okay, So inviting the retail traders that come here. You can see when I'm trading this level, this support level, I'm going higher, so you should come over here. Market is simply inviting the retail traders. Okay, sorry guys. Oh my god. Let's see, the sell side liquidity has been taken, like this low and this low has been taken, but this low and this low, this made the sell side liquidity much more stronger. See how the market is manipulating, the king of manipulator. See, this sell side liquidity has been taken, now it's good. Traded the mean threshold. I would like to see the market, this body will be close above the mean threshold level. So let's see what happens, but that's what I want to see. As we can see, the this candle which has taken the sell side liquidity has been closed above the mean threshold level. Wait, let me mark this as the sell side liquidity. The sell side liquidity has been taken, this is the mean threshold. Now as we can see, wait, yeah, see how beautifully the market is reacting to this mean threshold level. Okay, see, this candle also closed above the mean threshold level, no body has been closed below the mean threshold level. So now I would like to see the displacement. Okay, all the sell side liquidity has been taken, now the market will go for this buy side liquidity. That's what I want to see. Let's see what's gonna be happen. Now it's a news time. By this news, okay, by this news the market will be, I want to see this kind of candle over here. Now big displacements. Okay, let's see what happens. This is the last trade. If I get win, no entry for me. If I get loss, no entry for me today. And as we can see, it's 34, 11 minutes to go. Within the 11 minutes, no entry is valid for us. Okay, after 3:45 p.m. New York local time, I don't take entry. No entry is valid for me after 3:45 New York PM local time. Now I would like to see some sort of displacement. Okay, big candles. Let's see, can market provide us See, that's what I want to see. See, what a displacement. When the market will be tapping to the first partial, I would like to move my stop loss to the break even. That's the last fair value gap. Okay, that's why this is my first partial. This has already provided me 16 handle. Let's see what will gonna be happen. This is the live entry. Okay guys, I am taking the entry on live. I would like to say that no one should copy the trade. See how beautifully the market is reacting. That's what I want to see. I would like to take a partial over here also. Okay, this level. See what I said. I simply said that after taking the sell side liquidities, the buy side liquidities has been taken. The market will move for the sell side liquidity. Okay, the market won't keep those sell side liquidities like this. They are extreme sell side liquidities. So as we can see, the market simply taken the sell side liquidity, and the very next candle is started giving us the move. When the market will be tapping to the last fair value gap, we will take some sort of partial, then we will move our stop loss to the break even. That's what I want to see. As we can see, the last fair value gap has been traded, so this will be our first partial. I would like to see the market will be reaching until this. Okay, the market should reach until this level. That's the entry fair value gap. Market didn't trade the entry fair value gap. The market now, wait, let me show. Now one thing can happen now. Wait, let me mark this. Okay, this is the candle. So I now simply want to move my stop loss to the break even. Wait, So as we can see, market is over here. Market traded the entry fair value gap. Now the first partial, I would like to see the first partial is taken. My stop loss will be over here. Okay, over here. Let me draw the level. Now my first partial is on the break even. Sorry, it's better to keep the first partial on the break even, and that's my target profit. Sorry, I would like to see the market will be taking the liquidity. Okay, see how I got this entry. This is the last fair value gap. Okay guys, wait, let me take this over here. That's the last fair value gap. Okay, this gap is the last fair value gap. Okay, so I got my first partial. Now I would like to see what's the market is going to do. I got, let's see how much I got. It's nearly about 32 handle. Okay, it's nearly about 32 handle. Here I can see market created a gap. That's entry fair value gap. Let's see, the market can simply trade this gap, and see, market traded this gap, and that's the reaction from this gap. Okay, this is the reaction from this gap. Market traded the last fair value gap. Okay, this is the last inversion fair value gap. Market traded the last fair value gap. Let's see. I would like to put my stop loss below this level. Okay, here, but I am not putting my stop loss over here because I can see the volume imbalance over here. Okay, the market can reach until here. Okay, that's why I'm not moving or trailing my stop loss, but I will prefer you guys to put your stop loss below this level. Okay, and here as you can see, this candle body has been closed above the 50% of this fair value gap. So now market will show some accumulation, sorry, the manipulation. Market can trade this gap. Okay, this gap, this fair value gap, then market can again go for this buy side liquidity. This is nearly 42 handle. Okay, see how perfectly market is coming to trade. See, this is the last fair value gap. The market is reacting to this last fair value gap. The last fair value gap is always the strongest. Okay, that's the last fair value gap. The market can maximum come here. Okay, I would like to see the market can maximum come here. Now let's see what happens, but I would like to see the body will be close above the 50% of this gap. Okay, and my stop loss is on the break even. I got the partial. Now let's see what the market will do over here. Now there will be some sort of accumulation over here. Okay, some sort of zigzag. Okay, we will be seeing market will be inviting some buyers and sellers over here. Then the market will take some liquidity, then it will be moving for its direction. Wherever we can see the body has been closed below the 50% of this gap. Now this can be a fake breakout when the very next candle will close above the 50%. And now as we can see, this candle is trading, okay, this gap. So if this candle 50%, okay, if this candle body is closed below the 50%, then we will consider this as not a fake breakout. Okay, we can't say this is a fake breakout. Oh my god, where? I will always prefer you guys don't go for such a big run. Okay, this is the extreme buy side liquidity market. Don't go for the extreme buy side liquidity. Okay, not buy side. Market never see. I got stopped out, but no problem. I got almost how much? Nearly I got it's 32 handle. Okay, that's what my profit is. A big profit, huge profit. So this has mitigated my all of the losses. That's how you should trade. Okay, market made this buy side liquidity much more stronger. Okay, so I always say that never put your target profit onto the extreme buy side liquidity. Okay, always target for last fair value gap, entry fair value gap. You can take some partial over the entry fair value gap and put your target profit on the last fair value gap. But bullshit. So here, as we can see, the market is again trading the entry fair value gap and such a big run. I'd like to see the buy side liquidity will be taken. So let's go to 15 minutes chart and see when this candle, okay, no body has been closed below the 50%. Okay, how I take this entry, let me show you the precision. Okay, see, this is the new week opening gap. Okay, this is the new week opening gap. Market has taken this low, okay, then traded the new week opening gap. Then here I took entry, I got the loss. Okay, and before that I said this is the inversion fair value gap. Okay, this is the perfect inversion fair value gap. How? Because this is the buy side liquidity. Okay, this is the 15 minutes buy side liquidity, relatively equal highs. So this is the highest gap which this run has taken this buy side liquidity. Okay, so this is the highest gap which has taken the buy side liquidity. So this is my always I say, and this is my like inversion fair value gap entry setup. I always took the setup on this inversion fair value gap model. Okay, I don't take entries on inversion fair value gap, but this is the only setup which I take. So this is the highest like fair value gap which has taken this buy side liquidity. Okay, so the market simply traded. When I got the loss, I said that the market will take this inversion fair value gap. Okay, market will trade this inversion fair value gap, and I would like to see no body will be close below the 50%. Okay, 50%, the minimum it is, the body shouldn't be close above. The minimum is the body shouldn't be close, like there is two gaps. Okay, I would like to see it's much more better if the body is 15 minutes body is closed above the 50% of this new week opening gap, as here we can see. And the least, okay, the least minimum we can see is the body should be closed above the 50% of this inversion fair value gap. Okay, that's the minimum. Okay, so here we can see this has traded, then this has traded the 50% of this inversion fair value gap, and the body has been closed above the 50% of this new week opening gap. I took the entry, then like 15 minutes is my confirmation. Then I took the entry. Wait, I am showing you guys how I took the entry. Here, as we can see, there is the sell side liquidity. Okay, there is the buy side liquidity. Market always taken this buy side liquidity and kept some sell side liquidity over here. This is the manipulation. Okay, so here we can see the market invited the buyers over here, created the sell side liquidity, like a support zone over here. Market taken some sell side liquidities, then taken the whole, because this is the extreme sell side liquidity. Before going over here, market should take this sell side liquidity. So as here we can say I took the entry here from here. Wait, let me show you. I took the entry from here. Okay, so as we can see, the market simply taken this sell side liquidity, and from the very next candle I got the expansion. Okay, I would like to see this gap will be unfilled, and I put my target profit over here, which is a extreme buy side liquidity zone, and this is my first partial, which has been on the last fair value gap of this run. Okay, so market simply traded the last fair value gap, then come here, and I put my stop loss to the break even, so I got my first partial. That's it. Then here I will show another entry. Wait, I'm showing you guys another entry. Okay, here I got another entry. Like, let me go to 15 minutes chart. Okay, here we can see this is the buy side liquidity. Okay, and this is the last inversion fair value gap. Okay, this, like, this high has been taken by this run, and this is the highest, like this is the highest gap. Okay guys, so I marked this, and here as we can see, market simply traded the order block. Also the body has been closed above the 50% of this inversion fair value gap. So I will be consider this as a fake breakout when I will see the very next candle will be closing below the 50% of this inversion fair value gap. So here as we can see, the body has been closed, the very next candle has been closed below the 50% of this inversion fair value gap, and also traded the order block. Now here I can see my bias is now bullish until this new week opening gap. Okay, so simply I went to 1 minute chart. Here what can we see? Here we can see the market made the buy side liquidity. Okay, see how extreme, how relatively equal highs are these. They are the extreme buy side liquidity. Okay, so here as we can see, market kept the buy side liquidity and taken all the sell side liquidity. Okay, this is my inversion fair value gap entry. Okay, because here we can see this is the last fair value gap. The market didn't reach until the last fair value gap. So here as we can see, this is the down fair value gap. Okay, this is the most, in this run has taken this sell side liquidity. Okay, in this run, can you guys see any sort of fair value gaps over here or over here? Any fair value gaps over here? This is the only fair value gap which I have seen this run. Okay, on this run I only see this fair value gap. If I have another fair value gap over here, but I will be mark this as a valid inversion fair value gap. Okay, this is the down, this is the most down. Wait, let me explain. Wait 1 minute guys. Now let me show you guys on this run. Okay, how this is the valid inversion fair value gap. Okay, in this run, this is the sell side liquidity. Okay, they are the relatively equal lows. Here I can see, so this is the sell side liquidity. On this sell side liquidity, I can only see this fair value gap. Okay, now wait, sorry guys, Now if I had another fair value gap over here, I don't consider that as a valid inversion fair value gap. I would like to see this run has taken this sell side liquidity, the most down fair value gap, okay, the most downest fair value gap, okay, which fair value gap will be on the down, okay, which has taken the sell side liquidity, the bottom, okay, the fair value gap which is on the bottom, okay. If this is the vice versa, I will consider as the highest fair value gap, okay. So here as we can see, this is the only fair value gap, so no problem, but I marked this fair value gap. So as we can see, I marked this fair value gap as the valid inversion fair value gap, okay. So here I can see this is the perfect market structure shift. Market has taken all the sell side liquidity, no more sell side liquidity is left. So market simply came here to take this sell side liquidity and traded this order block, okay. This block has like blocked this run, okay. So this is my order block, and as we can see, when the market, the body has been closed above the gap, okay, whenever I can see the run, okay, this run, when the body has been closed above this fair value gap, this inversion fair value gap, then this is my valid inversion fair value gap. Now I can use it, and this is the perfect market structure shift. So here I can see this is the last fair value gap. I can put my entry, like take my entry from here, but the market didn't came over here, and this is not my entry, okay. I didn't take this entry, this was a backtesting entry. I simply backtested, and if you took the entry from here, your stop loss should be covering this candle, okay. But as we can see, this will be much like almost 13 handle, so I simply kept my stop loss over here. If I get stopped out, I will be taking re-entry from this last fair value gap, okay. So here as we can see, how the market simply respected this inversion fair value gap. You can say this body has been closed below the 50% of this inversion fair value gap, but here I can see this is a fake breakout, okay. As we can see, the body has been closed below the 50% of this inversion fair value gap, and the very next candle has been closed above the 50% of this inversion fair value gap. And see the run 1 2 3 4 5 6, okay. By the 6th candle you got your nearly 10 handle, okay. So this is a back tested entry, and this was the live entry which I take, okay, which I have taken on the live. It's nearly about half an hour before, okay. So this was my precised entry, okay. See how precised. So whatever I said, like that, the market has been provided me the entry. And see, by 1 2 3 4 5 6 7 8 9 candle, okay. By 9 candle, see the displacement. This is the run which I want to see before 345, okay. So this was today's live. Now I don't know what the market will do, because I don't trade after 3:45 New York local time, okay. So this was the session. Hope you guys learned a lot from this session, and that's it. Give it a thumbs up and subscribe to our channel. See you tomorrow on the New York M session. Bye bye.